This is ShadowQuant, Week Ahead, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Sunday, June 7, 2026, and this is the New York session. Now, let's get into it. Welcome to ShadowQuant's Week Ahead. The big story this week: the U.S. inflation report could upend the market's Fed rate cut expectations. Let's check last week's calls. I called for the yield curve to flatten further, and it did. The 2-year 10-year spread contracted by 0.38 percentage points. Correct.
My call was SPY to 740 by Friday. It closed at 737.55. Partial missed by 2.45.
I said Bitcoin would hold above $48,000. It closed at $46,900. Missed.
I warned the dollar would weaken against the yen. It did, but not enough. Partial.
I said the market would be stuck in a range. It was correct.
Macro landscape. Pulse, what's the big picture?
The week's key events start with the CPI on Wednesday. If inflation stays above 3.5%, the Fed may delay rate cuts. The 2-year 10-year curve is flat at 0.38 percentage points. That's a warning. The Fed funds rate is at 3.62%. The market is pricing in a 60% chance of a 25 basis point cut by year-end, but that's under pressure. The yield curve isn't just flat, it's inverted. That's a recession signal. The U.S. economy is growing at 1.6%, not strong, but not weak. The job market is still tight, with 159,000 jobs added last month. The unemployment rate is at 4.3%. The dollar is holding up, but the Fed's stance is fragile. If the CPI is too hot, the Fed may stay hawkish, and that'll hurt equities. If it's too cool, they'll cut. But the market is caught between those two extremes.
Thanks, Pulse. Let's turn to equities. Equities, grid, earnings, and indices.
We've got a big earnings week. The key players are.
Thanks, grid. Let's turn to currencies and commodities. Currencies and commodities. SPECTER.
The key FX events this week are the CPI on Wednesday and the PPI on Thursday. Those will shape the dollar's direction. The dollar is still strong, but the Fed's rate cut expectations are under pressure. The 10-year 2-year curve is flat, which is a warning sign. The U.S. dollar is at 118.88. That's a high level. The Fed is still hawkish, but the market is starting to price in rate cuts.
Thanks, SPECTER. Let's turn to crypto. Digital assets, CIPHER.
The crypto market is still in a bear phase, but there are signs of a bottom. Bitcoin is at $46,900. The 52-week high is $55,000. The fear and greed index is at 14, which is deep in extreme fear territory. That's a sign that the market is oversold. Ethereum is at $2,980. The 52-week high is $3,500. The key level to watch is $2,900. If it holds, the market could rally.
Thanks, CIPHER. Let's bring it all together. Let's bring it together. Apex cross-market themes.
The key themes this week are:
I think the yield curve is a red flag. A flat curve means the Fed is not confident in the economy. If the CPI is high, the curve could flatten further. That would be bad for equities. If it's low, the curve could invert. That would be worse. The Fed is caught between the need to cool inflation and the need to avoid a recession.
I disagree. The yield curve is flat, but the Fed is still in a data-dependent mode. If the CPI is high, they'll stay hawkish. If it's low, they'll cut. But the market is already pricing in a cut. That could help equities. If the CPI is low, the dollar could weaken. That could help crypto.
I think the key is the Fed. If they cut, crypto could rally. If they stay hawkish, it could fall. The fear and greed index is at 14. That's extreme. That's a sign that the market is oversold. But the dollar is still strong and the Fed is still hawkish. That's a challenge for crypto.
I think the equities are in a range. The key is the 52-week high for SPY, that's 760.4. If it holds, the market could rally. If it breaks, we're in trouble. The sector rotation is mixed. Energy and healthcare are up, but communication services and consumer discretionary are down. That's a sign of a risk-off environment.
So the consensus view is that the Fed is in a bind, the dollar is strong, and crypto is in a bear phase. But the unresolved disagreement is whether the CPI will be high enough to keep the Fed hawkish or low enough to push for a cut. That's the key.
Calls on the record, one each.
I'm calling for the Fed to stay hawkish. The CPI could be high, and that'll keep rates higher for longer. My call, 2-year Treasury at 4.2 by Friday.
I think the SPY will break above 760. The 52-week high is there and the market is in a range. My call, SPY at 760 by Friday.
I think Bitcoin will hold above 46,000. The fear and greed index is at 14, that's extreme. My call, Bitcoin at 46,000 by Friday.
I think the dollar will weaken against the euro. The 52-week high for euro-dollar is 1.1656. If it breaks above, the euro could rally. My call, euro-dollar at 1.16 by Friday.
I'm calling for a mixed outcome. The Fed is in a bind, the dollar is strong, and crypto is in a bear phase. But the key is the CPI. My call, 10-year Treasury at 4.5 by Friday.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Markets carry significant risk of loss. Always do your own research before making any investment or trading decisions. That wraps up this edition of ShadowQuant. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.